Here's a quick fundamental snapshot of Visa Inc., trading at $369.59 a share, sourced directly from SEC Edgar filings. Visa runs the payments network. It doesn't lend money or hold cardholder credit risk. It earns a fee for authorizing, clearing, and settling transactions between banks, merchants, and cardholders. That asset-light model is why the numbers ahead look so strong. And they are strong. Return on equity sits at nearly 76%. Return on assets is just over 21%. Operating margin is 60%. And net margin is just over 50%. More than half of every revenue dollar drops straight to the bottom line. In dollar terms, $40 billion in annual revenue converts to just over $20 billion in net income. That's the 50% net margin playing out directly on the income statement. On the balance sheet, total assets run about $95 billion, against $21 billion in long-term debt and $12.5 billion in cash. Debt to equity sits at a moderate 0.79. Leverage is present, but not aggressive. Now, the honest part. This snapshot doesn't include everything. Market cap, stock PE, book value per share, gross margin, and diluted EPS were simply not present in this data pool. They're not zero, they're just missing, and worth rechecking directly against the filings. The reason the margins run this high comes down to structure. Visa earns a small fee per transaction message routed between cardholder, merchant, and issuing bank, not per dollar of credit extended. Infrastructure scales with volume, not headcount, so profit scales right along with it. Every figure here traces back to SEC Edgar, CIK 0001403-161. This is a snapshot, not a live filing, and it's an educational walkthrough, not investment advice. That's the Visa Fundamental Snapshot. Happy to go deeper on any single number.